After setting an all-time high of just under $65,000 on April 14th, Bitcoin spent the next month fluctuating up and down. On May 12th, the next price direction was clear as Bitcoin fell back to 50,000. At the time of recording, cryptocurrency has fallen further. Since its peak, Bitcoin is down 37%, Ethereum is down 35%, and many other projects are down 50% plus. So in this video, I'm going to share my honest thoughts on where the market is headed next. We're going to hear what Cathie Wood thinks on this, and I'll share with you my exact plan in the months going forwards. Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get into it, and I'm not going to make you wait. Instead, let's just jump straight into this first clip with Cathie.
Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul-searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa. Let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
So over the past few months, Elon Musk has gone from praising Bitcoin, buying Bitcoin on behalf of Tesla, and allowing people to use Bitcoin to buy Tesla's cars, to criticizing Bitcoin, stopping purchases with it, and focusing his work on Dogecoin. However, the key point is that Elon highlighting the amount of energy that Bitcoin uses, combined with other factors, has caused the majority of headlines about crypto to read negatively. This combination of things, combined with investors simply becoming overly leveraged towards the end of that run, was always likely to end badly. But Cathie has just broken down why she believes Bitcoin could actually be a net positive for the planet in terms of global emissions. I'm going to share my thoughts on this shortly, but first let's hear from the main analyst at ARK who covers cryptocurrency.
I want to take a step back and first address how we think Bitcoin mining critics fundamentally misunderstand its importance to Bitcoin. So first, mining is the backbone of what makes Bitcoin secure and decentralized. It's what regulates Bitcoin's fixed supply, it's what protects it against nefarious activity, and allows it to have no centralized point of control. So when we're talking about energy consumption as it relates to mining, we really have to first consider what the energy consumption is enabling. And in this case, it's an apolitical, borderless, global synthetic monetary commodity. And that energy consumption is really no different than the energy spent to extract gold from the Earth's crust. The only difference here is that Bitcoin's energy footprint is just a lot more transparent, and so it makes it much easier to attack. Now, with that as the backdrop, even if Bitcoin does consume energy, it doesn't necessarily mean that it's destroying the environment. So Bitcoin critics who argue Bitcoin's bad for the environment conflate energy consumption with actual carbon emissions and pollution. And so what we tried to lay out in this most recent open source model is that Bitcoin mining can actually be a net positive to the environment by accelerating the adoption of renewables. And then we lay out the specific implications that it could have for solar energy systems in particular.
Still don't quite get it. We were just showing a graphic from Bank of America,
Sure.
Merrill Lynch, which showed that not a lot of other human activities generate a higher carbon footprint per dollar. And in fact, $1 billion in Bitcoin purchases, they say, is equal to the CO2 emissions of 1.4 cars driven in 1 year, 1.2 million cars driven in 1 year. And then we're showing some other 1.5 coal-fired power plants per year, 632,000 home energies used for 1 year. Is that wrong?
Yeah, let me first address that framing, and then we can get into the actual model and how it relates to solar energy systems. So a lot of the analysis that you're seeing here is a transaction energy cost analysis, which a lot of people reference, and in our belief is completely flawed, because Bitcoin's energy consumption doesn't actually scale with transaction throughput. So it's very easy to come up with some sort of metric of, look how much energy we need to consume to facilitate a single transaction. But there is no per transaction energy cost in Bitcoin, in that individual transactions don't actually carry any energy payloads. That goes back to what the use of mining is. It's really a means to facilitate the newly issued supply and then effectively reward these miners for securing the network. So the quantity of resources that miners are willing to spend has nothing to do with the number of transactions that Bitcoin can support.
Okay, so when it comes to the energy debate surrounding Bitcoin mining, you often see headlines about how much energy Bitcoin uses. For example, Bitcoin consumes more electricity than Argentina. Now, these words make no sense at all. As with everything in life, when you have one thing, you compare it to the alternative, not to Argentina. In Bitcoin's case, the alternatives would be either gold or the banking system. So Galaxy Digital penned an excellent research report showing how Bitcoin mining uses considerably less energy than gold mining and less than the banking system. And this is what actually matters. Let's say Bitcoin is successful and it eats into gold's market share. If that happens, the price of gold falls. As a result, there are fewer miners digging it out of the earth, and that reduces the energy used by gold each year. So yes, Bitcoin may use energy, but if it reduces energy consumption in other areas, the overall net result for the planet, which is all that really matters at the end of the day, may in fact be less energy usage. This is one of the funniest things, in my opinion, when you read about cryptocurrency in the mainstream news. I constantly read about Bitcoin versus countries like Argentina, and it just doesn't make any sense. Last time I checked, Bitcoin is not trying to disrupt Argentina. That's like comparing the number of Netflix subscribers to the number of stars in the universe. Sure, it might make a good headline, but wouldn't it be more useful to compare Netflix subscribers to something like Disney Plus subscribers? That seems a lot more relevant to me. Well, in the same way, the only comparison that actually matters is Bitcoin versus gold, or Bitcoin versus banking. Another point that ARK often note in their analysis is that Bitcoin's energy usage could speed up the adoption of renewable energy. And the reason is this. Let's say you're thinking of getting solar panels on your roof. Up front, it costs you $10,000. Over the next year, you're going to produce some energy to power your house. And when you have an excess, you're going to sell that back to the grid. So in total, you'll save $500 for the year. So you've put $10,000 in up front and you're earning $500 every year. That means it will take you 20 years to get your initial money back. That's not a bad investment, but 20 years is quite a long time. Now, obviously these numbers do vary on your location, but the point I'm about to make remains the same. What if there was an alternative when you have excess energy? What if instead of selling it back to the grid for a very low price, you could use that excess energy to mine cryptocurrencies like Bitcoin? By doing this, you'd be taking excess energy and earning more than you could from selling it back to the grid. So now instead of earning $500 a year, you could be earning $1,000. So instead of it taking 20 years to get your money back, you're getting it back in 10 years. This makes solar panels a much better investment, which encourages more and more people to put them on their houses. From this, we can basically see how cryptocurrency mining could improve the maths behind renewable energy and hence speed up adoption. Now, to lay everything out, I do think there are some valid concerns around cryptocurrency mining. I'm all for pushing towards only using 100% renewable sources, as saving the planet must be our #1 priority today. At the same time, I want to highlight how the argument surrounding cryptocurrency mining is, firstly, a lot more nuanced than most people think and the media portrays. And secondly, if you find yourself reading about Bitcoin's energy usage versus a country, instead of versus gold or the banking system, just put the paper down, close that tab and walk away, because whoever wrote those words has no idea what they're talking about. So with all of this in mind, what does this mean for the price of Bitcoin and cryptocurrency? I'll share my thoughts on that in a sec, but first, let's hand it back over quickly to Kathy.
What happens though in the meantime? So here we are at 35,000, Kathy. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
Do you have a low point on your model for Bitcoin?
No, these metrics are more a measure. Are we in a truly capitulation phase? Okay. And it's very detailed. Yassine uses on-chain analysis, which this is the only asset where you can see exactly who's doing what, when, why, and how. And all of those metrics are saying this is a capitulation. This is as bad as it got during the coronavirus crisis.
So it's fair to say that Kathy is still bullish. In fact, just earlier this week, ARK bought another $20 million worth of Bitcoin. And this goes along with the $20 million of Ethereum that they purchased in the middle of May. So clearly, Kathy is putting her money where her mouth is. Now, what do I think? Well, on April 16th, when Bitcoin was at 60K, in this video, I shared two things with you. Firstly, I will never sell my entire crypto holdings. This is the most innovative market in the whole world. Selling everything would be crazy. Secondly though, I've been in crypto both as an investor and as my full-time job for nearly 4 years. So for me, it was the right time to take some chips off the table and to diversify more. Now, it looks like I got pretty lucky, as Bitcoin was just over 60K at the time and has subsequently fallen a considerable amount since. Feel free to check this out if you like, by the way. The video is up on my channel still, and the date is clearly shown. Now, I could sit here and claim this was some genius move on my behalf. I know a lot of the BS traders you see everywhere would do just that. However, it just wouldn't be true. The truth is, it just made sense for me at that time. There was a lot of luck involved, and I wanted to share it with you. Now, I do believe the market has been in an overhyped state for the past 6 months, and a crash is inevitable. I've been very open about that all along. If you look back through Bitcoin's history, there was a bubble in 2010, another in 2011, 2 in 2013, and 1 in 2017. So yes, I believe that history is repeating and a bubble is forming. At the same time, predicting the top of a bubble is pure luck. And anyone that tells you different is lying, usually to sell you something. So, has the bubble burst? Well, if you listen to Raoul Pal, for example, he shared this chart. The blue line represents Bitcoin's price from 2010 to 2013, and the white line is today. As he notes, there was a mid-cycle crash before, so maybe this recent drop is just another mid-cycle dip before Bitcoin continues higher. Honestly, nobody knows. What really matters though is this chart. The white line shows the growth in the number of internet users from 1992 to 2006. The orange line is the growth in the number of Bitcoin users since 2016. As Raoul notes, the internet grew 63% per year on average, while cryptocurrency is currently growing at a much faster 113% per year. Again, this is not the price, this is the number of actual users. And this is what I'm investing into. I'm investing into an innovative technology with a faster growth rate than the internet. Now, the volatility can be tough, and I don't see it going away for a long time. That's why I think there are only 3 options you can take. Option 1, don't invest anything at all in cryptocurrency. If you sit out entirely though, you're going to miss out on the fastest growing technology around. Historically, that's normally a bad call. Option 2, invest heavily as the market is going up. I'm including this as an option because it's so commonly done, but I think we all know why this is maybe not such a good idea. Or option 3, this is what I do. I invest for the long term, minimum 5 years. I understand there will be ridiculous volatility along the way. It's basically guaranteed, but the payoff for the volatility in the long run is worth it. And I rebalance my portfolio to the allocation that I want in crypto. So for me, that's 20% of my overall portfolio. I do not try to time the market, I just rebalance to my chosen number. For some, it's a higher number, for others, it's lower. It's your money, and you have to decide what you want to do with it. So I hope my rambling has somewhat helped, and I'm keen to know what you think. Do you think crypto is headed higher or no? Let me know in the comments below. Thank you for watching. I will see you again very soon.